Hi, everybody. Jeff Barton for the Mortgage Minute. Thanks very much for tuning in and listening. If you want to see this, go to YouTube, Jeff Barton, the Mortgage Voice. We also have a radio show that we do weekly, 5 stations, 3 different states. We're also on 8 major podcasts called The Big Eight, and obviously, again, on YouTube. What I wanted to talk to you today is about the Federal Open Market Committee meeting, which really resulted in very little change in the Fed's outlook other than a slight adjustment to the nature of what next year may bring. I think we're all looking forward to COVID being over and the economy getting back to normal. I think that will happen. It was also interesting that some of the indications from the Fed were that the stimulus package that is wending its way, looks to be about to happen, is going to affect the economy in a positive way. They've been shouting for it for quite some time. And the fact that we have a symbiosis between Janet Yellen and the Fed simply because she was the previous chair, her, Jerome Powell, and I think some of the economic team is not the progressive team that some may want, but it is a continuation of some of the policies that we already have. And that's a good thing for the markets. It's a good thing for lending. Also, a couple of things going on with United Wholesale. United Wholesale is the largest purchase lender in the United States. They're about to go public. Rocket Mortgage, TPO has already gone public. We've talked a little bit about the downside to that. One of the side notes is the broker community here in Southern California is pretty strong. Now, I know this particular feed goes national, but 3 different brokers have sued United Wholesale for their change in the EPO and how the lender collects money that they I guess, assume is based on churn by the broker. Now, churn is something by which is a broker would give someone a higher rate only to refinance them within 3-4 months to get another commission, lower them just a little bit, and then continue to do that. And if you do that over a long period of time or for a great number of borrowers, it's called churn. United Wholesale has accused these 3 borrowers of doing that, but they also changed the nature of the contract that they were in. EPO, what is that? Early payoff, that's what that is. So if someone gets a loan and pays it off in a month, well, they demand the money they paid to the broker or to the lender or whoever it is they bought the loan from to be repaid, and you sign an agreement to do that. In that, there's a term. How long do you keep the loan? How long is it before that they can refi? It used to be 3 months, now it's 6 months. Well, United Wholesale looked at 100 brokers they thought were doing churn and reasserted their, I guess, authority and said, no, you don't have 6 months, you have a year. So in the 12 months, there were several of these 3 different ones, brokers who decided, no, that's not right, paying up to $16,000 to $70,000 per loan that UWM accused them of having churn on. Yeah, that's a problem for the brokers. So the brokers, 3 of them, sued in court yesterday or was it the day before? It was one of those 2. And it's pretty interesting because we have accusations flying from UWM, but we all know UWM is the largest player around, and everybody loves doing business with them. It'll be interesting to see what happens in the broker community. That broker community lawsuit is going to affect quite a few people who have loans with certain, obviously the borrower can go and get a refinance with anybody they want. But if the same broker does it, it's going to take a year before they can do it again, and the borrower is the one that gets hurt, not the broker. The broker may have to pay back some of that money, but the borrower themselves can't lower their rate and possibly save some money. Anyway, I'm Jeff Barton, your voice in the mortgage industry for the Mortgage Minute. We'll see you on Monday.